stablecoin adoption has exponentially grown over the past few years. We can see that through this chart showing the total volume of stablecoin transactions, so basically the usage. Back in the second quarter of 2020, only $100 billion worth of transactions occurred through stablecoins. By the second quarter of 2023, that number rose to over $2 trillion. And recently, in the second quarter of 2025, it has shot up to $7.5 trillion. That's a 75-fold increase in only 5 years, and we think this growth is set to accelerate even further because of the Genius Act, which aims to establish a regulatory framework that fast-tracks stablecoin integration into the mainstream financial system. You see, compared to traditional bank transfers, stablecoins settle in under 10 minutes instead of 1 to 5 business days, cost less than $1 per transaction, versus over 1.5% for credit cards, and operate 24/7 instead of just during banking hours. And now, with this Genius Act legislation in place, it could prove to be the catalyst that drives the stablecoin market significantly higher. We're already seeing early signs of this playing out in the market. This chart shows the total market cap of all the stablecoins in circulation. Since 2024, the stablecoin market has gone from $130 billion to $260 billion. So doubling in size in just 1.5 years, and this is likely just the beginning. U.S. Treasury Secretary Scott Bessent projects the stablecoin market cap to reach $3.7 trillion by 2030, which would be an increase of nearly 1,500% from current levels. This matters a great deal for Ethereum, and we can see why through this chart showing where stablecoins are actually hosted. Right now, Ethereum accounts for just over 50% of all stablecoins in circulation. That's about $130 billion out of the total $260 billion. The next closest network is Tron, which holds roughly 30%. This dominance makes Ethereum the leading infrastructure for stablecoins and uniquely positioned to capture a large share of the growth ahead. As stablecoin adoption accelerates, it means more transactions, higher fees, and greater demand for Ethereum's network, which ultimately drives more demand for the Ethereum token itself. So, if stablecoins become more widely adopted under clear regulation by the Genius Act, Ethereum stands to benefit both in usage and in valuation. And institutions are already positioning themselves for this potential growth on Ethereum. But it's not just institutions loading up on Ethereum today. There's another powerful buyer that has recently entered the market, and they're accumulating at an unprecedented pace. These are known as Ethereum treasury companies. They consist of firms that hold Ethereum on their balance sheets as a strategic reserve, much like Bitcoin treasury companies like MicroStrategy do with Bitcoin.